Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Welcome back. In Part 1, we looked at why emotion AI platforms often fail to read human emotions accurately. Now, let's examine the legal, ethical, and investment risks that make these tools a dangerous choice. The table above shows how easily a machine can misinterpret human signals. When a tool ignores these cultural differences, it produces biased results. As a result, the hiring platform might accidentally filter out talented international candidates. This lack of accuracy makes the software less useful for global companies. If a platform doesn't work for a diverse workforce, its market share will stay very small. The problems with neurodiversity and physical differences. Emotion AI also creates massive barriers for neurodivergent individuals. People with autism, for instance, might not use traditional facial expressions or may avoid eye contact. Many AI models flag these behaviors as low engagement or lack of confidence. This is not just a technical error. It's a fundamental flaw in the logic of the software. It punishes people for having different neurological profiles, even if they're perfect for the job. In addition, people with physical disabilities or speech impediments often face unfair scoring. A person with partial facial paralysis might be labeled as uninterested by a computer. Because the AI is looking for a specific normal type of face, it fails anyone who falls outside that narrow range. For an investor, this means the company is building a product that is inherently discriminatory. This narrow focus limits the product's appeal and creates a massive liability for any business that buys it. Legal red flags and the high cost of bias. The legal world is finally catching up to the risks of biased AI. Governments are no longer letting companies use these tools without oversight. For example, the EU AI Act has placed strict rules on emotion recognition in the workplace. In some cases, these tools are being banned or restricted because they violate privacy rights. If a startup's main product becomes illegal in a major market, its valuation will drop overnight. Investors need to look at the massive costs of legal defense. If a job seeker sues a company for bias, the hiring platform often gets pulled into the fight. Defending these cases costs millions of dollars in legal fees. In addition, the negative PR can destroy a brand's reputation before it even gets off the ground. Most importantly, insurance companies are becoming wary of covering firms that use high-risk AI tools. Why lawsuits are a real threat to your portfolio. Bias is often baked right into the training data of these AI platforms. If the developers used videos of only one demographic to train the bot will favor that demographic. When this bias is discovered, it leads to class action lawsuits. Investors should avoid companies that are one legal ruling away from bankruptcy. Many tech startups think they can fix these issues later, but the flaws are often too deep to patch. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.